Hey there guys, today we're going to be going through the 2024 2.3 balance day adjustments. So essentially in this video we're just going to go through and input this information over here on our left side of our screen here, which is our additional information, and we're going to put it into our into our trial balance, which is on the right side of our screen. And the reason we do this is just because this is some information that hasn't been included from the that was in the financial year that hasn't been included, so we need to put it in and make a few adjustments. Now, once we make these adjustments, guys, we will be able to take this information here from our trial balance and go ahead and put it into our financial statements, and that's what we'll be looking at for the test. So this is the resource booklet that they give you for the test, and in this video we're going to be covering 2024. If you haven't already, guys, check out my video on 2.3 balance day fundamentals. I go through just kind of what the basics of a lot of this stuff. So if you haven't already checked it out, definitely worth doing. But yeah, we'll jump on into it. So essentially, guys, with this test, with the balance day adjustments here, we're just looking at going down through each bullet point and then inputting it in. So we'll start off with this first one. So advertising has been paid for April 2024, $340, excluding GST. So guys, if it has been paid for April, and our trial balance is at the 31st of March 2024, and it's been paid in April 2024, then it's not part of our financial year that's included in our trial balance, so we need to make an adjustment. Okay, so starting off with it's going to be $340, so we're going to decrease our advertising by $340. So getting out our calculators, guys, 1,840 minus 340 is going to give us 1,500. So we're just going to cross that out there. 1,500, just like that. Pretty simple. And now what we're going to do now, guys, is just thinking about advertising has been paid in advance. It's going to be a prepayment, okay, because we've prepaid the payment. So for that, what we're going to do is we are going to create a new account called prepayments. And now this account is going to be an asset, okay? Because one way to think of it that kind of makes sense for some people is that if the company were to go insolvent tomorrow, they just need to look at the complete balance sheet, they would probably be able to get that advertising money back, okay? So it would be an asset, right? A little bit confusing to wrap your head around, but once you kind of start doing a few of these practice tests, you'll understand it a bit more. So we're going to create our account here called prepayment, and it's going to be for 340. Right, so this is our first balance day adjustment done. Let's go in here and cross this out. Good enough. We'll do a better line. Just a second. Good enough. Okay, so the next line here, next bullet point, sorry, is office wages owing, $1,500. Okay, so if they're owing, they are due. So we need to pay them. So again, if the company were to end tomorrow, we'd still need to pay our workers, okay? So what we're going to do, what that's going to be, is it's going to be a liability, okay? Remembering liabilities are on our credit side. So for doing this, we're going to increase the expense because we need to pay this expense, okay? So coming over here to office wages down here, 23,000. We're going to cross this out and we're going to go 23,000 plus 1,500, which is going to give us 24,500. So we'll chuck that in there. 500. Nice and easy. And then we're going to create a new account, which is going to be a liability. And now, instead of calling this maybe like due expense or something like that, it's called accrued expense, okay? And now accrued is just Latin for due. So It's just one of those words that they want you to mention, but it just means due. There's no kind of curveballs there. So what we're going to do is we're going to go ahead and we're going to create this account on the right hand side. So we're going to call it accrued expense. Nice. And this is going to be 1,500. Nice. So we can cross that out. Okay. Sorry. Okay, coming on to our third bullet point here, interest on mortgage is owing. So, the mortgage is 7.1% per year, just coming over here, guys. 7.1% per year, and it's due 2040, so quite a way away. But we can figure out what the yearly mortgage is by just going into our calculators and putting in 288,000 plus, sorry, not plus, times by 0.071, and that's just what our interest rate is that they've given us over here. So we're just going to tuck that in. So 288,000 times 0.071. That's going to give us a number which is 20,488. So I'm just going to write it down at the bottom here just so we don't forget that. 20,448. Nice and easy. So coming over here to our interest on mortgage, sorry, it's only 18,200. So we're going to need to increase that up because we need to pay our mortgage, okay? So we'll start off by just going into our interest on mortgage and just creating the new account, which is going to be, changing the account to increase to 20,448, just like that. Nice and easy. And now what I'm going to do now, guys, is I'm going to find out the difference between those two numbers. So to do that, I'm just going to go 20,448 minus 18,200. And that's going to give us 2,248, 2248. So again, guys, this is just going to be another accrued expense, right? Because it's a due expense that we need to pay, okay? So what we're going to do is we're going to go 1,500 plus 2,248, which is going to give us 3,748, okay? So we're just going to go over here and we're just going to cross that out. 3,748. So guys, don't be worried if they give you like a few questions that are like, a few adjustments that have maybe 2 or 3 accrued expenses. Sometimes they'll chuck ones like that at you where they give you quite a few of the same. Just, stay confident. Most of the time you'll normally be correct. Okay, coming on to our fourth bullet point here, which is a little bit more of a tricky one. It says, GG Games Galore rents some of its land and buildings to fund time first learners at $3,220, including GST per month, payable 1 month in advance. So if it's payable 1 month in advance, that means they've paid a bit extra in advance, okay guys? Because they would have paid for April and March. So what that means is it was a prepayment, okay? So what we need to do is we need to find the GST exclusive amount, okay? Which we're just going to find that, we're just going to go 3,220 divided by 1.15, which is going to give us 2,800, okay? So the first thing that we're going to do is we're going to go over to our rent received over here, 36,400. We're going to cross that out and we're going to go 36,400 into our calculators minus 2,800, which is going to give us 33,600. Okay, so 33,600. And then we're going to create a new account, okay? New account? No, not a new account. We are going to... Yes, we are going to create a new account. Sorry, my apologies. A new account which is going to be income in advance, okay? Now, again, guys, just thinking back to if the company were to end today, that rent, they wouldn't be able to rent out the area anymore, most likely, that they're paying GG Games Galore wouldn't be able to rent out sorry, my apologies, I'm confusing you guys a bit here. Fun Time First Learners, these guys over here, they're not going to be able to rent out that area anymore if the company went, if our company went insolvent. So the income that they paid for the rent in advance is actually going to be a liability. Okay, so what we're going to do is we're going to create a new account over here called Income in Advance. Like that, guys, and this is just going to be 2,800. Nice. So now that we've done that, we can go ahead and cross these two lines out and we can get on to the next one. So on the 1st of March 2024, rates totaling 900 excluding GST were paid for the next 3 months. So if it was $900 for 3 months, that means it's $300 a month. And now we paid on the 1st of March, so that means we would have paid for all of March, all of April, and all of May. Okay? So if we paid for all of April and May, we need to remember here, guys, that that's not part of the financial year that we're looking at. So that was a prepayment, okay? So we don't want to look at that, really. That's the general gist of it is. So what we're going to do is we're going to increase, we're going to debit our prepayments, and we're going to credit our expense, okay? So, in terms of that, doing that, so remembering if it's a debit, debiting a debit is going to increase it. So 340 plus 600 is 940, okay? Just like that. And then we're going to credit the expense. And now if we credit a debit, that's going to decrease. Again, guys, go check out my video on balance day fundamentals if you haven't already. It kind of explains a little bit of this a bit more in detail if you're a little bit confused right now. But coming over here to our expense, which is rates over here, 4,200, we are going to decrease this by 600. So 4,200 minus 600. Just chuck that into your calculators, guys, if you're unconfident, but it's 3,600. So just like that, guys, that's all they're looking for us to do for those first two questions there. So again, pretty straightforward, not too much to worry about. So next up, guys, is we're on to some depreciation questions, okay? So they say the shop fittings are depreciated using the straight line method, $1,560 annually. So this one is quite a straightforward one. All we need to do is just do to debit depreciation and credit accumulated depreciation, okay? So I go through all this in the fundamentals video, but remembering here, guys, for depreciation, we're going to create an account which is going to be an expense, which is depreciation. And this is for shop fittings, so we'll see if we can squeeze it in there. We don't even need to do any calculations just because they give us the number, so that is 1560. And then when we're gonna come over to this side here, we're gonna increase accumulated depreciation, which is liability. So what we're gonna do, guys, is we're gonna go 5,200 plus 1560, okay? And that's gonna give us 6,760 or 6760. So we can cross this line out here and we can go 6760. And then just like that, guys, that is another bullet point done. Okay, so coming on to our next bullet point here, which is looking at depreciation on office equipment. This one over here. We're actually going to skip over this one just for now. And the reason that we're doing that is just because it kind of comes down, there's another adjustment that needs to be made down here, looking at new office equipment bought, and that's going to kind of just impact a little bit around our depreciation and stuff like that. So what we're going to do for this, guys, is we're just going to come back to this one at the end. So If you see a question that is looking at depreciation of a PPE asset where there's been stuff that's been bought or sold, I'd come back to that one at the end. Normally it's going to be like quite a hard question where you're looking at excellence marks. So yeah, I'll come back to that one at the end once we've done all of our other adjustments. Okay, so coming on to the next line here then, now that we're going to skip over depreciation on office equipment, we are going to be looking at an invoice on hand on the 31st of March 2024 for repairs and maintenance is yet to be recorded, $414, including GST. Okay, so now remembering, guys, from our fundamentals video that if we have an invoice received for an expense, we're going to debit the expense, debit GST, and credit accounts payable, okay? So what we're going to start off by doing, guys, is finding the GST exclusive amount of 414. So just going into our calculators, 414 divided by 1.15 is going to give us 360, okay? So 360. So 360. So we'll start off by debiting our expense, okay, guys? So we haven't paid this expense, but we need to. So what we're going to do is we're going to increase our expenses. And now this is for repairs and maintenance. So what we're going to do is we're going to come over here to the repairs and maintenance, which is 2490, chucking that into our calculators, guys, 2490, and we're going to plus 360, okay? We're going to plus the GST exclusive amount, which is going to give us 2850. Just change that down, guys. 2850. Perfect. Okay, now what we're going to do is we're going to debit GST. Now, as GST at the moment is a liability, it's GST payable, it's GST that we owe, debiting that credit is going to decrease it, okay? So what we're going to do is we're going to, first of all, we're going to find out what GST is. So we'll go the GST inclusive amount of 414 minus the GST exclusive amount of 360, which is going to give us 54, okay? So we're going to go 6380, which is the GST payable, minus 54, okay? So 6380 minus 54 gives us 6,326. So just coming over here, 6,326. Okay, so now that we've done those two, the final thing we're going to do is we're going to credit accounts payable, okay? And we're going to credit accounts payable by the entire GST inclusive amount, okay? So we're going to, accounts payable obviously is a credit. Crediting a credit is going to increase it. So what we're going to do is we're going to go, accounts payable up at the top here is 4590. So 4590 plus the entire inclusive amount, which is 414. Yep, 414. That's going to give us 5,004. So we'll cross that out, put 5,004 in there. So that there, guys, is that first line there done. We'll go ahead and we'll cross out this. Nice. Okay, so moving on to the next one. Invoice issued for sales on the 31st of March 2024 and not yet recorded, 1,610, including GST. This inventory costs 640, excluding GST. So when they ask us, when they're telling us that the inventory costs 640, excluding GST, it's kind of just one of those things where the NCA will do, where they're trying to catch you guys out. You'll just need to ignore that, and we're only looking at the top part here, which is for the invoice issued for sales or fees. Okay, so when we issue an invoice, we're going to debit accounts receivable by the full inclusive amount, credit sales and fees by the exclusive amount, and then we're going to credit GST by the difference between those two. Okay, so we'll start off this time with, let's start off with accounts receivable. Okay, so 3190, and we're going to debit accounts receivable. Okay, now accounts receivable obviously being a debit, we're going to debit a debit, which is going to decrease it. Sorry, not decrease it, increase it. Okay, so 3190 plus 1,610 is going to give us 4,800. Okay, So we're going to cross that out there and write in 4,800. Okay. Now what we're going to do, guys, is we're going to find the GST exclusive amount. Okay, so that first part's done. We've debited accounts receivable. Now we're going to find the GST exclusive amount. So 1,610 divided by 1.15 is going to give us 1,400. So what we're going to do is we're going to come over here to sales, because remembering this is from sales, and we're going to credit sales. Okay, we're going to credit sales. So if we're crediting sales, and sales is obviously a credit as it's an income, we're going to increase it. Remembering crediting a credit is going to increase it. So 480,900 plus the GST exclusive amount of 1,400 is going to give us 482,300. Okay, 482,300. Nice. And then just finally, guys, we're going to change our GST payable. We're going to credit GST payable. Okay. Credit GST payable? Yes, credit GST payable. So 6,326 plus 210. Hold on just a second here, guys. Yeah, plus 210, sorry. Just wanted to double check that there. So yeah, so 6,326 plus 210 is going to give us 6,536. Okay, so that's what our new sum here is going to be. 6,536. Perfect. So we've done our accounts receivable, our GST, and our sales. Okay, so that is that bullet point for our invoice issued done. So now what we're going to do is we're going to go on to our final one, which is looking at an invoice on hand for new office equipment. Okay, so remembering, guys, with our office equipment, we're purchasing PPE, okay? So that confuses a few people, but what you've got to remember is that invoices received for the purchase of a PPE are essentially the same as invoices received for an expense. Just instead of debiting the expense, we're going to debit the PPE while everything else stays the same, okay? So it's reasonably straightforward. Does seem a bit more daunting, but it's the same general idea, okay? So what we're going to do is we're going to start off with by crediting accounts payable by the full amount. So what that means is obviously accounts payable crediting a credit will increase it. So 5,004 plus 2,990 is going to give us 7,994. So we'll come over here, guys, and we'll write that new number in, 7,994, just like that. Okay, now what we're going to do is we're going to find the GST exclusive amount. So 2,990 divided by 1.15 is 2,600. Okay, so coming over here to office equipment, currently it's 7,200. We're going to go 7,200 plus 2,600, which is going to give us 2,600 plus 7,200. It's going to give us 9,800. Okay, so 9,800. Nice. Alright, guys, now that we've done that, we'll just do GST for that one. So to find GST, we'll just go the GST inclusive amount less the GST exclusive amount. So 2,990 minus 2,600 is going to give us 390. Okay, so remembering here, we're still going to be debiting our GST payable. So in this case, as GST is a credit, debit a credit, it's going to decrease it. So 6,536 minus 390 is going to give us 6,146. Okay, 6,146. I'll just erase that stuff so we don't get confused on the right. Nice, 6,146. Okay, so again, this line here is now done. We can move on to our next one. Okay, so coming on to our next bullet point here, which is the allowance for doubtful debts is to be 3% per annum. Okay, so remembering back from our balance day fundamentals video, guys, the doubtful debts is just it's a percentage of accounts receivable of people who we're not really sure if they're going to pay back their debts or not, okay? So it's not like bad debts where they've been completely written off. It's kind of like in a limbo phase where we're still not 100% sure. So in terms of calculating it, we need to start off by finding out what 3% of accounts receivable is, okay? So to do that, we just go 4,800 times by 0.03, okay? And that's going to give us 144, okay? So starting off with, guys, we're just going to have to now go in and change allowance for doubtful debts to 144, okay? So our new allowance is going to be 144. And then what we're going to do is we're going to create a new account, which is going to be an expense called doubtful debts for the value of the increase, which was 34. Okay, doubtful debts. Just like that, for 34. Nice. So doubtful debts is really one of those a little bit more complicated concepts in accounting that takes a decent bit of time to just kind of wrap your head around. But once you get the hang of it, it really starts making a lot of sense, and you'll kind of see it and understand it a little bit more once you do a few practice tests, I mean. So anyway, that wraps up that bullet point, so we'll get on to the next one now. Inventory on hand has a net realizable value of 17,500. Sorry, guys, excluding GST due to damage. Okay, so what that means is we need to decrease our inventory, which is an asset, down to 17,500. Okay. So we're going to start off with just putting into our calculators now, guys, the current value, which is 18,320, minus 17,500, okay? That's going to give us 820, okay? So we're going to store that in our calculator for now, but 18,320, and we're just going to cross that out with our new figure, which is 17,500, okay? So now that we've done that, we're going to come over here to our cost of goods sold. So remembering, guys, with our inventory, if we have to revalue our inventory, cost of goods sold is going to be what's being affected as the other double entry account, okay? So cost of goods sold, we are going to credit. No, we are going to debit cost of goods sold, okay? We're going to increase it. So what we want to do is we want to go 210,500 plus the difference between 18,320 and 17,500, which we just worked out was 820, okay? So 210,500 plus 820 is going to give us 211,320, okay? So 211,320. Nice. Okay, so that bullet point is now done. Now, just quickly, guys, these two bullet points here, they're not data as such that we're going to put into our trial balance. They're just some data that we're going to use to classify different stuff in our income statement, just so it's all in the right place. And that's the same with this up here, which I got rid of it being highlighted. Electricity is split 90% shop and 10% office. So what I thought we'd just do is we'd just go next to electricity and we'll just write 90/10, just so we remember when we're going through our income statement, okay? So that really means we only have one left, which has been accidentally crossed out, which is for depreciation on office equipment. So my apologies there. Yeah, so for this this question here, it looks quite confusing, but it's still reasonably straightforward, guys. So for depreciation on office equipment, it's charged at 15% per annum diminishing value method, and the new equipment is not depreciated this year. So immediately now that we know that the new equipment is not depreciated this year, what we're going to need to do is we can just forget about the figure of 9,800 over here on the left and only worry about 7,200 over here on the right. So what we're going to do is we're first going to find the carrying amount, okay, guys? So the carrying amount is the value of the asset that we paid for it minus the accumulated depreciation, okay? So 7,200 minus the accumulated depreciation over here for office equipment, 3,260, okay? and that is 3,940. Okay, so that means currently the current carrying amount of the asset is 3,940. Okay, so if it's 3,940, to figure out a 15% depreciation, because now that we've found the carrying amount, we're just going to times it by the 15%. We just need to go 3,940 times by 0.15, which is going to give us 591. Okay, so that's what the depreciation for office equipment for the year is going to be. So we'll just go and we'll squeeze it on in here. Depreciation. Office. And we'll just squeeze equipment in there. Remembering for our actual financial statements, we never want to abbreviate stuff, but for our trial balance, it's okay, and we can kind of get away with it. So that's going to be 591, guys. And then just coming over here for crediting our accumulated depreciation, it's going to be 3260 plus 591, which is going to be 3,851, okay? So we're going to go over here, and we're going to go 3851. Okay, so that is now that bullet point there done. And then just finally this last bullet point here. In April 2023, GG Games Galore sold the office equipment. We're going to come back to that in our statement of, and in question 2, looking at our statement of financial position. It doesn't actually get inputted into our balance sheet, okay? So that kind of wraps up this video, guys. Sorry about some of the cuts and stuff. I had a few problems with recording. I hope it was still a watchable video. But yeah, my video on the actual 2024 walkthrough will be coming out very, very soon, over the next few days, if it's not already out, if you're looking at this in the future. But yeah, I hope you enjoyed the video, and best of luck, guys. Have a good rest of your day.